So, self-assessment. Yeah, that time of year again. You excited? No, thought not. But if you've got income that's not taxed at source, that means tax is taken out before you get your hands on it, whether that's self-employment, a side hustle, rental properties, or you're a high earner, it's just part of the deal. The deadline's the 31st of January, and here's the thing, loads of people filing this year could be missing out on pensions tax relief they're actually owed back from HMRC. So let's grab a cuppa, take a breather, and I'll try to break it all down for you. And remember, all the key links to your self-assessment can be found in the video description below. So, first question, do you actually need to file? Well, the answer is yes, if you're self-employed and earned more than £1,000 in the tax year. If you earn more than £1,000 from renting out property, if you receive more than £2,500 in untaxed income, maybe freelance work, if you earn £10,000 or more from savings, interest or dividends, you need to pay capital gains tax or the high income child benefit charge, or you're a higher or additional rate taxpayer and want to claim extra pension tax relief. Now, this list is a general guide, but there can be other reasons to file for self-assessment, so it's always worth double-checking with HMRC just to make sure you don't get caught out. Now, remember, there are penalties for missing the deadline. So what do you need before you get started? Your 10-digit unique taxpayer reference, UTR. You'll find this on letters from HMRC or in your online account. You need your national insurance, NI number. This is on your pay slips, a P60 or personal tax account. Your income records, things like invoices and bank statements. Your expense receipts, maybe for equipment, travel costs or anything else you've spent money on for work. If your turnover is under £90,000, you can just enter one total for expenses. If it's over that, you'll need to list each type separately. Now, this is the bit most people don't know about. When you pay into a personal pension, your pension provider claims 20% basic rate tax relief from the government and adds it straight to your pot. But if you're a higher rate taxpayer, that's anyone earning between £50,270 and £125,140, you can also claim back an extra 20% tax relief back through your self-assessment. And if you're an additional rate taxpayer earning above £125,140, you can claim back even more, an extra 25% tax relief back. If you don't claim it, this is really important, you simply don't get it. And HMRC is not going to remind you, so don't let it slip your mind. Now, how do you go about actually making a claim? Well, it's pretty simple. When you fill in your self-assessment form, look out for the section on pension contributions. The section asks for payments into a registered pension scheme, annuity contract, or employer's scheme where deductions were made after tax. Enter the gross amount, that's the full amount including the 20% your provider already added. So if you paid in £8,000 and it became £10,000, enter the number £10,000. Now the system does the maths. You'll either get a refund or your next tax bill will be reduced. You don't need to send proof when you file, but do keep your records for at least 5 years in case HMRC asks to see them. And there's a bonus. You can backdate claims for up to 4 years. So if you've missed this before, you can still claim back what you're owed. Last tip, don't leave it until the last minute. Start now, get your UTR sorted, gather all your paperwork and file early. And think ahead for next year. If your last tax bill was over £1,000, you'll pay tax twice a year, on the 31st of January and the 31st of July. These are called payments on account and they can be painful. So here's a quick tip. Many self-employed people save around 20 to 30% of their income to cover these costs. File before the 31st of January, claim pensions tax relief, keep your records for 5 years, and plan ahead. Self-assessment, okay, it might not be fun, but it doesn't have to be stressful. With a bit of planning and a few reminders, you'll be done and dusted before the deadline and maybe even get some tax relief back for your pension too. Thanks for watching and good luck. Let us know if you've got any questions in the comments below, and if this helped, please subscribe and stick around for more straightforward explainers on pensions and money.